So now we're going to look for a track record of dividends. Now, every investor is going to be different here. So first of all, what is a dividend? Well, a dividend is a portion of the profit that the company pays out to its shareholders to reward the shareholders for being um, loyal investors as such. But not every investor will want that either, because some investors might want the company to reinvest the profits to grow sales and to grow their product base and their service base. So not everybody is interested in dividends, but people who are looking for kind of, I suppose, slower growth, steady Eddie companies probably will be interested in dividends. So this particular area is going to be really specific to each individual investor. If you're looking for share price growth, well, then dividends are not going to be that particularly important to you. But if you're looking for a bit of income as well and reduce the risk somewhat, maybe you will look for a dividend. So again, what I'm going to do is show you where to get the information from in TradingView. So we're going to look at search. We're going to type in Alaska Airlines. We're going to go to the financial section and dividends, and you can see here all the information you need is here. And this payout ratio here is important. Again, if you're unsure what that means, just click on the question mark and it'll explain it to you. So the payout ratio is, so let's go back over time, and they actually did pay out a dividend. You can see here in 2019, they paid out a dividend of 140. The dividend yield, so the dividend yield is the dividend amount divided by the share price multiplied by 100. So it's what's the yield on the share price. In this case, it was 2.07%. So they paid out a 140 dividend per share. Okay. And the payout ratio is, well, how much of that 140 is taken out of its profits. So it's the ratio out of the profits. So they would multiply 140 by the total amount of shares on issue. That will come to X amount, a million or billion, and then they will take that as a percentage of the profit for that given year. And in this situation here, the payout ratio was 22.63%. So in other words, the company paid out 22.63% of its profits to the shareholders via a dividend. The reason this is important is that 22% of profits, that's very realistic. So if the company was to continue paying a dividend going forward, you know what, to take, less than a quarter of the profits and give it to the shareholders, that's reasonably sustainable. But if this number, for example, was 120%, well, that would mean that the company is giving away all its profits plus now eating into its cash savings to pay in order to pay out the dividend. And if that was to continue over time, it's not sustainable. Eventually, the savings run to zero, and the company would have to borrow then to pay out the dividend to keep the dividend amount going. So this payout ratio is important to look at. Now, as you can see, since COVID, this company hasn't paid out a dividend. So we can't give it a tick, but I wouldn't give it a negative either. We understand why. It's an airline. No airlines have recovered, started paying out their dividends as of yet, to my knowledge. But that will change in the near future, I would imagine, as they pay down the debt that they accumulated throughout COVID. So we'll go back to our PowerPoint presentation. No dividends since COVID. Previous yield was about 2%. If they start paying dividends into the future, you could expect about 2%. The payout ratio is below 30%, which is very sustainable going forward. So there will be a possible dividend payout in the near future as the company returns to profitability. So all in all, just a little message for yourself in your research note here. No dividends as of yet, but pre-COVID, 2% payout was manageable. That's just all you can take from that in terms of your historical research analysis. So now finally, we're going to move into company debt levels and then follow that by, is there a track record of the company buying back its shares? So we'll go and analyze that in our next video.